In this video, I'm going to talk about the Dow Jones, which is what we're looking at right now, and Japanese yen futures. So I promised to make this video. This isn't a typical update video. It's just something that I wanted to share and I wanted to review and also make sure that we had it recorded, because there was a discussion over the weekend. I had a weekend webinar for coaching students, and the discussion was how to apply and use the Japanese yen, and then it ended up with what are my thoughts here on the Dow and the market correction and over the last couple of weeks. So we're looking at the daily time frame. This is where I sort of ended that conversation that we had after the webinar, and I was doing some Q&A. So my thoughts here are that there is a range or a pocket of support running through here right around the 2370 area, 2380 area, and very often I'll always go back to the idea that support and resistance is not always going to be an exact number. Sometimes it will. Sometimes we see this happen when we're trading Forex and things, and price will stop. Even cryptocurrencies, for a while in 2017, cryptocurrencies were so consistent as far as the retracement and stopping at almost a precise support or resistance, depending on which direction it was moving in. Last year, in in an uptrend, so when price would pull back, it would stop precisely, and not to the exact number, but really, really close. Like technically, you almost couldn't tell. But you can't count on that. So sometimes you'll notice how choppy it is over here, where this was back. This is. Let me go back to February 8th. So February 8th, this spike, February 9th, I'm sorry, this spike low, and then you see how price comes back and retests it. And sometimes it'll get really close, sometimes it'll hit it, sometimes it'll go just a few points below it, and then sometimes it'll fall short of it, right? Sometimes it's like pretty obvious. You can see it. You don't need to measure it. You can see that it's falling short of it. And then the same thing with resistance. So that's one of the first things I want to sort of bring to attention, is that even though I can find this range or pocket of support, because it's not always going to be a precise number, you've got to have, if you're going to trade it in any direction, wherever you can project a take profit level or an expected take profit level, price target, magnet, right? Everybody else is looking at pretty much the same thing, so you're expecting it to go down that direction. If you've got other tools and other technical skills that are sort of leading to your confirmation of where you think price is headed, you have to have take profit levels. So you have to have a precise entry, and then you have to have a take profit level, and then you want to know where your stop is, just in case the trade isn't going to work out or it takes a while. So that's the first thing, is that there's got to be a take profit level somewhere around here on the way down, right, to this expected support level, if this downtrend is going to continue. The other thing to keep in mind is, before you get into a trade, you've got to have your expectations in line. We're looking at a daily time frame. So if you're considering trading off of a daily time frame, you know where I'm going with this. You've got to have your stops in order. I mean, you got to understand that you probably can't use the same stop that you are using if you're day trading on a 30-minute or 1 hour or 15-minute chart. You can't. It doesn't always work. I mean, you might get lucky, but you've got to be careful. You got to consider different things when it comes to the stop, but also the amount of time that you're going to leave that trade in place. Like how much time are you going to give it? Because sometimes what will happen is, I get the question with coaching students when we get into a trade. They'll say, well, how much longer are we going to hold on to this trade? And what I always go to first is, well, let's take a look at it. Let's take a look at the structure. It's always about the structure, right? As long as the trend or the trade remains intact, I'm going to continue to hold it. There are, on occasions, times when I would consider that enough time has passed that it's probably not going to work. And we're talking about these rare instances where the market's in this state of waiting for the next whatever it is, right? The outcome and that catalyst, whatever's going to create that break. So sometimes when price moves inside of consolidation, sometimes you can sort of guess that it's going to be a couple of days, especially with Forex. It's a pretty a pattern that repeats quite a bit. And then other times, if it's like a Brexit or a political election and things like that, it might take a little bit longer. So it really depends. And sometimes you can look at the economic calendar and you can look for events that might trigger a breakout. and then wait, sit and watch for that event. But, if it's like, like holidays, major holidays, and just nothing's happening, I might just go ahead based on how long I've held on to the trade and what I expect things to how I expect it to go. So if it's like, for example, Christmas here in the United States, or the first of the year, and it's a few days before that actual event, that holiday, and we've already been in a trade for 2 days, then you get my point, right? And, who wants to sit through Christmas or New Year's and babysit a trade like that, and then have the start of the new year have something happen, right? It's possible that something could happen that would then cause that big gap and big change in direction and sentiment and just all of that. So there are times when I might avoid it, but for the most part, I'm not going to use time as a measure or a point in time to actually determine if I should close the trade. So it's about the structure. So I'm going to open up the charts here just a little bit, and we've got this high here. We've got a clear high. Now, I talked about in the weekend webinar with my coaching students how we can identify if this is a top. Now, we don't always know, right? We do our best with the skills that we have at this point, up to this point, and we're always looking to improve. You should be, but you use the best, use the tools that you have, the ones that you know how to use the best, right? And then gain that experience, but try to identify, are you really looking at a top? Is this really something that we could expect could indicate a top? And then there's more to come. It's also true that just because a trend line, there's a break in the trend line, price crosses through it, that doesn't automatically signal that price is going to reverse and there's going to be a brand new trend and the whole thing's collapsed. There's more to come because there could be Fibonacci retracements on the other side, support and resistance on the other side that could stop price and then maybe cause a bounce, something like that. But at least up to that point, right, with all the data that we have right now, we've got a high, and we were able to determine this over the course of a few months, watching, and I'm not going to get into that discussion because I've got videos in the members area on how we, the tools that I use and the structure that I use, the patterns, to identify possible highs and lows in the market. And then when you apply those tools and those techniques to the larger time frames, they actually work a lot better, right? You eliminate a lot of that noise, as they say, and you're looking at the overall bigger picture. So at this point, we've got a new A high, and that was October 3rd. And then we've got this drop. We've got a small pullback right in here, but for the most part, we've got an A high, a B low, and then that retracement. And based on the depth of that retracement, we can project some extension targets, Fibonacci extension targets. So I'm going to use this tool, and it's important. This is another discussion I had over this weekend with another group of coaching students, was using the Fibonacci tool. So using the Fibonacci tool with the most significant high and low, right? Because I see people sometimes, they're not stepping back and looking at the overall bigger picture, and then they're just looking at small price swings, and then they immediately draw the Fibonacci tool. And let's say, for example, if it was in an uptrend, they might draw, like an A high, B low, or something like that. An A low and a B high, and then look for the retracement, and then immediately start to bounce once it hits like a Fibonacci retracement level. I know that I did that. I did that when I first started trading, and I didn't know how to use the Fibonacci tool correctly. I didn't know how to go back in time and then start looking for the most appropriate price swings where I could then safely use and appropriately use that Fibonacci tool to gain that information that I needed. How far is the retracement? How far could I expect price to go? This is pretty clear. This is pretty obvious. We've got another chart where we have that A high, that B low, and that retracement there, which projected what happened here, that major move. That was, let me go back over here to the dates. That was October 10th. So it's sort of what happened here projected this, but then we can sort of group this into a weekly chart, and it would smooth out that retracement in here. So you get my point. We've got a clean, clear A high, B low, and then we've got some possible extension targets right around here. I believe I mentioned the 2370, 2380 area. I'm sorry, the 23,080, 800, 23,700 area. I apologize, I've been talking Forex all weekend long. So this would be my projected extension target. But again, remember, it's not going to be a precise number. It's a range or a pocket of support. And one of the things that helps me determine that is how choppy it is here. This range right here is from the first of the year leading all the way to about May. it's pretty choppy in here, but there are several different levels in there, and I want to make sure that I lock in profits along the way if I'm going to consider selling something like this or a pattern that looks like this. So again, if this direction is expected to continue, if it continues, this would be a price level that I think would be pretty obvious and definitely approachable as far as sort of like a magnet in price, right? It's definitely a support level. It's definitely an extension target, and it's something that I think that would cause a lot of doubt in, I mean, you look at some of these candles here and you wonder, and people are deciding on that day, is this all fear-based? Is it just, is it healthy, or is there more to come? All of that, that a move down here lower is definitely going to have people talking, but then it could sit once it reaches that support level, right around that 23,700 level, 23,800, or maybe even lower, the 23,500 level. And it could sit on that range for quite some time, and we could move into consolidation. But this is definitely a range that I would think could, price would definitely consider, if it continues, I would consider locking in profits if you're going to trade futures. Again, this is the Dow. And something else to consider. So if price holds at that support level and that extension target, and it turns around, well, then we would stop looking at it altogether, right? We would stop looking at these extension targets, and we would have already taken profits here at these extension targets anyway. We're going to scale out. So with every trade, there's going to be 2 different locations that we're going to lock in profits. To sit here and to hold onto price, expecting it to go down to these levels, is probably a pretty big mistake. It's something that I did quite a bit in the beginning of my trading career. I didn't have 2 levels where I would safely get out of the trade or lock in some profits in the beginning of my trade and then let the rest of the trade continue, right? Let the other half of the trade continue to an extension target that I could find like this. This is a perfect example of a situation just like that. Sometimes there was profit, and some profitability in the trade, but because I was so determined to and hopeful in making as much money as as much money as I could see here. I mean, this was a big payday, right? That's what I was hoping for, rather than to be paying attention to what's going on here and determine that things could turn around at just about any time. You've got to be prepared for it. There's going to be a lot of people that are going to fight this. There's also the trader psychology that comes into this trade, and you've got to be aware of it on certain days. So we saw that over the last couple of days and the last couple of weeks as price was sliding down lower. So I'm going to move to the Japanese yen futures, and we'll talk about the same thing for the most part. All right, so we're on a different chart here, a different platform for the moment. And if you've been following along over the past couple of weeks, while we're trading dollar yen, I like to keep an eye on Japanese yen futures. There are obviously other areas to be watching if you're going to be trading dollar yen, but this is definitely something that I think that most people can start off with as far as looking for additional sources of confirmation. This is very first of all, we're looking at futures. We're looking at volume, true volume. We're getting a lot more information here as far as the strength or weakness of the yen for the most part. Something that you can quickly look at. This is I believe this is the day. Yeah, this is the daily time frame. So when we see price moving higher, indicating yen strength, we would expect the dollar yen to drop and move lower. And that's precisely what we've been doing and using with this particular chart, right? This we're looking at Japanese yen futures. We're using this as confirmation. So very often, before I get a signal in the dollar yen, I will get some kind of a signal or confirmation here looking at this chart. And it's extremely important that you be aware of what's going on here. What we had a while back, and this was, let me go to this, this is October 4th, that low. So there's an A low, a B high. That B high is October 15th. And then the C retracement. So it doesn't quite go to the 50% retracement level. Again, I'm not going to go into depth on the Fibonacci tool. You can watch those videos in the membership area, but the depth of the retracement would help me determine or help me with my expectations as far as how far I would expect price to go and which one of these extension targets that I would hold price to if I was in the trade. Again, scaling out at a couple of different locations in a trade like this to ensure that I'm going to be earning some profits, but you get my point. So we've got, you know, this final target here all the way back up here at resistance. So you sort of understand how I was talking about earlier. We want to make sure we lock in profits before it approaches one of these major resistance points, all of that, everything that we take into consideration. We're looking at volume levels here. So last week, you can see right here, this candle is the 26th. On the 26th, we were watching this particular chart and waiting to see and wondering if price would actually close, this candle would actually close, this daily candle, close above this B high, which at that point, if you're following along with any of my trading strategies, this would indicate to me a possible continuation breakout trade. So I would be looking for the same patterns, the same ones that I execute for day trading on the 1 hour time frame. I would be looking for the same signals, the same type of strategy here on this chart on the daily time frame. I do the same thing when I'm looking at dollar, you know, the dollar index and futures, the same thing. So it did not, this is the one thing that I want to really stress, is that it did not close above that B high. So for those of you who are watching on that day, it looked pretty exciting, right? We were using this, again, this chart to confirm our trades on the dollar yen, and it looks like it could bounce around inside of consolidation for a little while. It also looks like maybe in the next couple of days it could eventually close above that B high. I really don't know, and it doesn't matter to me what it does either way, as long as I get confirmation before I make that decision to trade. That's all that matters to me, is I need confirmation. However, throughout this time, and we're looking at this and we're talking about just the technicals, right? There's a lot of information here going on. We can break down a lot of different ways to look at it. But there's also the fundamentals, right? We want to be paying attention to economic data. Economic data supports and confirms the activity that we see here technically. So as I mentioned, just as I started talking about this particular chart, very often I get signals here on this chart, Japanese yen futures, before I get signals on the dollar yen, which gives me the opportunity to prepare for my dollar yen trades and to execute with confirmation. And it works, and these patterns repeat over and over and over again. So to end this video here, I just want to say, again, keep an eye on these specific levels. We're going to end here talking about the Japanese yen futures, so that you can incorporate this information with your dollar yen trades. But at this point, these daily candles have not closed above that B high, indicating a further move higher. We do have the retracement. I mean, some people will trade off of this level here. I don't like trading off of the 50% retracement level. Very often it'll do just this. It'll approach the B high and then roll right back over and sometimes test or sometimes retest a lower Fibonacci retracement level, the 618, and then bounce. I'd prefer to trade off of the 618 and then look for that confirmation. Again, lining things up with economic data. But don't expect that we're going to, even if it spikes above that B high from the 15th of October, until these daily candles close above that high, I don't have confirmation that this is going to continue with a lot of force with a brand new uptrend. But I'm not saying that it isn't going to happen. We're just going to have to follow along and wait for this information and the day that actually happens.